Alrighty, 4:30. Thanks everyone for joining today. Please use the question button on the webinar toolbar to ask questions throughout the presentation. We will be holding all questions for the end. We are also going to be sharing the slides and the presentation recording following the live presentation. Now we'll kick it over to Tom Bracken.
Thank you and good afternoon. I'm Tom Bracken, President and CEO of the New Jersey Chamber of Commerce. I want to welcome you this afternoon to the webinar with Neil Bradley, Executive Vice President and Chief Policy Officer of the U.S. Chamber of Commerce. Neil is going to cover a very wide range of crucial information, including the additional COVID-19 relief package that is in Congress as we speak, and how the U.S. Chamber sees the economic recovery taking form. I want to thank our two partners today, advisory and accounting firm Withum, especially Bill Hageman, the Withum CEO and a member of the State Chamber's Executive Committee. Thank you, Bill, for all your support. Also, our other partner is ROI New Jersey. Tom Bergeron, the editor and chief content officer of ROI, is joining us, and Tom will moderate the Q&A with Neil. Finally, I want to thank the 26 chambers of commerce from across the entire state of New Jersey for partnering with us on this webinar, excuse me. Their partnership will be particularly important as we go forward, as we are engaging them in developing recovery strategies for the state in conjunction with an initiative that Neil and the U.S. Chamber initiated earlier this week. As I mentioned, Neil Bradley is the Executive Vice President and Chief Policy Officer of the U.S. Chamber. He has a huge job at the Chamber as he aligns the Chamber's overall policy priorities and efforts. Neil joined us on April the 2nd to discuss the CARES Act legislation. He received rave reviews with over 600 participants participating on his in-depth knowledge of the legislation and how it applied to the businesses. And it was a very, very strong reaction and feedback that we got from his presentation. So we wanted to bring him back today to discuss the additional COVID-19 relief package and other things. So it is my pleasure now to turn this over to Neil Bradley.
Well, thank you, Tom. It's a pleasure to be back with you. It's hard to believe that was the first of the month and that we're still here and doing this and working through these same issues. But we really appreciate your leadership in New Jersey and your partnership there as well with your Federation of Chambers there in New Jersey. And we're confident that working together, we're going to get through to the other side of this. And so I'm going to pull up a slide deck here that we can use. All right, everyone have that there? Tom, is that coming through? Perfect. So we want to do a quick update on the CARES Act, the latest, including the legislation currently pending and soon to pass Congress, and also a little bit about what we're seeing with return to work issues. We're all excited to get past this phase that we're currently in and get to reopening, but we know that reopening is going to present its own set of challenges, just as the closure has. So let's start with just a reminder of a quick overview. Remember, we're talking about the CARES Act. That was the phase 3 bill, over $2 trillion, including support for the Federal Reserve that can leverage it to provide additional resources. We're going to talk a little bit more in depth about those Federal Reserve programs today and what those mean. Remember, hopefully by this time, many of you have begun to see the automatic payments to individuals from the IRS direct deposited into your accounts, or checks coming in the mail, and the expanded unemployment. We talked a little bit about this the last time, but one quick thing I wanted to update everyone on is this growing concern that if you take state unemployment benefits, particularly in a state that may have a fairly generous formula, and you add the $600 a week on top of it that the federal government's providing, that we've created this disincentive for individuals to return to work. One of the things that we've been working on at the U.S. Chamber is making sure that there's a clear understanding of what the federal requirements are. Just as you can't quit your job for a non-COVID related reason and take unemployment insurance, if your employer or an employer offers you the opportunity to come back to work and an employee refuses, they lose access to this expanded unemployment benefit. So it's going to be incumbent on employers to make sure they share that information with state unemployment offices, and then for those state unemployment offices to make sure that the federal laws are being followed here. But the last thing we want to do is create a hindrance for employers in getting the workers they need back, particularly if they're trying to get that PPP loan forgiveness going forward. So let's talk a little bit about 4 of the key provisions from the CARES Act, just as a quick reminder of what's available. And we'll spend most of our time on the PPP program. Remember, this was the $349 billion loan/grant program. It's proved incredibly popular. Before it ran out of money, the program had made 1.7 million loans to small businesses across the country. The provision, the legislation that Congress is passing tonight that will be signed into law, we expect tonight by President Trump, replenishes those funds an additional $310 billion. In our conversations with the administration, we expect that if the president signs it tonight, OMB, the Office of Management and Budget here in Washington, does their work first thing in the morning, that the loan programs will be reopened at some point tomorrow. The EIDL program, that's an economic injury disaster loan. You may remember this from Superstorm Sandy or for some of the other natural disasters. This is the SBA-run disaster program for small businesses. That program also ran out of money, and it has been sidelined. This bill provides an additional $50 billion in loans and $10 billion for grants. This is that $10,000 grant that small businesses can receive. We likewise expect that beginning tomorrow, the SBA will begin reopening this and processing EIDL loans and approving individuals for both grants and loans. Remember that in addition to those 2 programs, because we are concerned about both of them running out of funds again, there remain other programs available to small businesses that are not capped. That includes that employee retention tax credit, up to $5,000 per employee. If you accept a PPP loan, you can avail yourself of this. But if you don't end up getting a PPP loan, or you decide that PPP doesn't work for you, this is a really important tool to be able to help offset some of the payroll costs. And of course, there's the payroll tax deferment that's available to all businesses already to defer the payment of the employer portion of payroll taxes. If you defer that 6.2% that you would normally pay, you don't have to repay that in 2021, half of it, and the remaining half at the end of 2022. Again, though, there's a little bit of interaction with the PPP program. Main Street Lending, this is the program that we didn't have much to say about when we got together last time, but now we have a lot more details. This is the program that's supported by the Federal Reserve. A little over a week ago, the Federal Reserve released draft term sheets, which is their way of releasing guidelines for these programs. It's available for U.S. businesses with less than $1 in revenue. These are loans that are going to be made through banks. You won't be showing up to the Federal Reserve and filling out an application. Instead, what the Federal Reserve will do is to encourage lending by financial institutions, is that the Federal Reserve will essentially purchase 95% of the qualifying loans, leaving the 5% on the bank's balance sheet, 95% moving over to the federal government or the Federal Reserve's balance sheet, and that sharing, or the federal government taking on a large portion of that risk, is designed to help encourage banks to lend. Now, I mentioned that they released the term sheet. They also asked for comments, and they're currently in the process of revising that term sheet based on the comments that they received. We expect them to soon release revised terms, and that this program will start around or on May 1st. Now, there are certain things that they're likely going to be unable to change because these are restrictions in the law. That includes that borrowers will agree not to conduct stock buybacks, pay dividends, or increase executive compensation during the term of the loan plus 1 year. The term of the loan in the draft term sheet was not to exceed 4 years. Now, that's something that we expect could change. Some of the things that we are particularly watching as we get the new term sheet, in addition to that term of the loan, is the minimum loan amount. As it was originally designed, the minimum loan amount was $1 million. We expect that to come down. The maximum loan amount was, for most businesses, tied to EBITDA and your potential for losses there. We expect some changes around there that might make it easier for small businesses to access loans. We also think there could be some changes with respect to eligibility, particularly if you are a U.S. corporation, but you have an overseas or foreign parent, making sure that you're eligible to access this program. And there might be some relief, not on the stock buybacks or executive comp, but perhaps on dividends, because we know some, particularly mid-sized businesses, routinely pay dividends and would need to be able to do that going forward. One of the reasons this program is going to be so important is because it supplements the PPP program. And as we move past PPP, as we begin to reopen the economy, this type of lending support through banks and financial institutions is really going to be critical. Speaking of one of the reasons that's going to be critical, I just want to give you a sense of magnitude of the PPP program and also what to think about moving forward. I mentioned 1.667 million loans approved by the SBA. There were nearly 5,000 lenders participating in this program. 74% of the loans have been for under $150,000. We've all been reading about certain companies getting, the maximum $10 million. That happens, but that means they have an incredibly large payroll. Remember, your loan is based off 2.5 months of your average payroll cost. If you think about that for the average loan around $206,000, or the 74% that are under $150,000, what you're really talking about are businesses, with fewer than 20 employees in terms of the average loan amount. If you just logically compute 2.5 months over the course of a year, what that average payroll looks like, assuming an employee making around $50,000. So what does this mean moving forward? If the average loan amount remains the same, and there's good reason to believe that it actually might go lower, but if we assume for a moment that it remains the same, $310 billion only supports 1.5 million more loans. So we think it's actually quite likely that the PPP program will run out of funds again in a matter of days, unfortunately. One change to the PPP program, doesn't have to do anything with eligibility. All the eligibility rules stayed the same, but $60 billion of that $310 billion has been set aside for smaller banks, credit unions, minority lending institutions, and CDFIs, those community development financial institutions. Many of those banks and lending facilities did not participate originally in the PPP program. If you haven't gotten a loan, if you're considering a loan, one good thing to consider is reaching out to some smaller banks, credit unions, or CDFIs and inquiring if they are now going to participate. I suspect that what will end up happening is that the $250 billion that goes out through kind of the 5,000 lenders that are already participating might actually go and might be dispersed more quickly than the $60 billion that's been set aside for those smaller financial institutions. So if you're aware of those in your community, that's a great resource. I would be calling them and asking them if they're going to participate. And if you're considering making an application for a PPP, seeing if you can do it through one of those institutions. Let me quickly turn now to return to work. And I just want to mention a few things that as we all begin thinking about what we need to do to return to work, some of the issues that are arising. About last week, the White House released their guidelines for return to work. Here, we've copied the guidelines for employers for all phases. So the things that we're encouraging businesses to think about is social distancing and how they'll implement that. A lot of companies are either being required to or voluntarily conducting temperature checks. It's not a requirement at the moment, but how that might be implemented. A more robust cleaning program for sanitation, and two issues where we're particularly pushing for more guidance and clarity on are the role of employers in monitoring the workforce for indicative symptoms, so their health, and also policies and procedures for testing and contact tracing. So this is areas that most employers never have any role in whatsoever. It raises lots of questions about medical privacy and how you might protect workers and their privacy, but also comply with certain guidelines. The White House also released guidelines for employers in each of the phases of reopening. I really want to draw your attention to closing, for all employers, closing down common areas and enforcing social distancing. Also, special accommodations for vulnerable populations, which are individuals based on age, so individuals above the age of 65, as well as people with underlying health issues. We've raised a number of concerns and questions to make sure that employers, if they're providing special accommodations, making sure that there's a safe harbor, that they don't run afoul of the typical rules that would prevent some type of special accommodation on the basis that it would in fact be discrimination. And so we're worried about some conflicts here between some of the recommendations and some of the requirements under existing law. Obviously, there are also some requirements for specific employers. In particular, we're concerned about employers where they congregate a lot of people. So think about restaurants or bars, obviously, movie theaters and other places where the business model requires a lot of folks getting together at one time. That's clearly not going to happen for an extended period of time. And obviously, those employers are going to have some type of special accommodation or program to support them if they're going to survive. In addition, we think there are a number of other return to work issues. As I mentioned, what's the role of employers in testing, tracing, and health monitoring? We know that some large employers are already implementing testing programs for their employees. We talk to other large employers who are less inclined to do that, and a lot of mid-sized and smaller businesses who simply won't have the capacity or the expertise to do an on-site, on-premise testing program. That we believe that that's going to require a pretty ubiquitous and robust third-party tracing system, probably in addition to normal healthcare providers, whether that means pharmacists or some of these drive-through facilities at major retail locations. Clearly, there's going to have to be an expansion there. A new concern that is emerging is this question of whether it's guidance or regulations. So to date, CDC and OSHA, for example, have issued guidance for employers. There is a push among some in Congress. The New York Times editorial page recently editorialized in favor of this to convert guidance into regulations. And we're seeing some states do the same thing with their guidance. We're quite concerned that if this becomes a one-size-fits-all regulatory approach, it's going to be really difficult for employers to come back to work. I have this vision in my head of inspectors showing up with tape measures and saying, you're 3 inches shy of 6 feet in social distancing between desks, and all of a sudden the employer is in trouble. And one way employers can be in trouble is legal liability. My colleagues at the U.S. Chamber and our litigation center have been tracking the number of COVID-19 lawsuits that are already filed, including lawsuits that are filed alleging that an individual contracted COVID-19 while at work. We're seeing some states create assumptions in their workers' comp about where an employee might contract the disease. These are all incredibly problematic if we're relying on employers to begin bringing people back to work. And of course, a patchwork of rules. To give you an indication of how absurd some of the patchwork has been, we just talked to a national company, operates in New Jersey and all kinds of states, all 50 states actually. They're currently tracking 2,000 different requirements across state and local governments, including, for example, multiple jurisdictions that require temperature checks, but have decided that different levels of temperature are the cutoff point. And so you can imagine you're operating in one county and 100-degree temperature, you're fine. And the next county, 101, you're fine. And then the third county, 99.5, and you have to go home. And you can imagine the chaos that that's creating. And then, of course, I mentioned resources, especially for those businesses who rely on high occupancy. So we're engaging members of Congress right now. Tom mentioned some of our work with he and his colleagues at the state chambers to really tackle this, and to the extent possible, making sure that we provide that legal protection, those safe harbors, that we maintain guidance, and we adopt the best of what works without becoming overly litigious or regulatory in the approach to reopening. So a lot more work to go ahead on this, but that is where we're quickly turning our focus. And so with that, I will turn it back over to Tom, and we'd be happy to take your questions or your advice, both with respect to the CARES Act, PPP, but also reopening or anything else that we need to be thinking about.
There we go. I'm unmuted. Hi, folks. Tom Bergeron from ROI here. Neil, that was great insight. Questions are already flowing in, so we'll get right. Here we go. I'm concerned about, get this out of the way. I'm concerned about employee and customer lawsuits. And I know we just talked about that. How can we open the doors if we can't be 100% certain that we do not cause a COVID-19 infection? Give a little bit more guidance on that type of situation.
It's a real concern. It's a concern because we're seeing it happen already. Now, you know, the truth is that many of these lawsuits might not be successful, right? It's very difficult to prove the point of contraction, for example. You know, unless you're a healthcare worker and, you know, you're exposed to it repeatedly in a hospital setting, for example. But you're right to be concerned. We think that the best thing that the federal government and also states governments can do is to provide some safe harbor and legal liability protection, but we don't know when that's going to come, or even a guarantee that it is going to come. And so I think these are things worth thinking about, doing everything you can in terms of best practices to protect yourself as much as you can. But I can't dismiss the concern because it's one we share.
The PUA program, we're getting a lot on that. And I know that I believe that still has not been rolled out in New Jersey. Has that been rolled out in other places, or are they still waiting for guidelines on that?
No, so we're talking about the pandemic unemployment assistance?
Yes,
Yeah,
please.
so it has been rolled out and implemented in some states. I can't say for certain what the status is in New Jersey. Some states are up and running. I will tell you it's currently, I believe, a minority of states that have successfully implemented it and begun processing claims, but it is occurring in different parts of the country.
All right, 501c6 organizations. Any chance that they're going to be included down the line? What's the talk on those?
We're quite hopeful. In fact, I learned about 30 minutes before joining you all that I believe Senator Menendez actually signed on to a letter supporting inclusion of other 501c nonprofits as part of this. I'll confirm that, but he was on the list that I was just given. That's really good news. We've been growing the number of House members and senators who are publicly calling for support and inclusion of C6s, but it's going to take a statutory change, and that's not going to occur until we have the next bill. And so I feel like our odds are getting better, but we're not there yet.
So that's a good question on the next bill, and I guess it starts with whether some people are calling this bill 3.5 or 4.0. give us a timeline on that. It's the $100,000 question. I know, pardon the pun. What are you hearing about as soon as they get this one passed, that they start working on the next one?
Yeah, the current discussion is, no, we're going to wait a while. We're going to wait till members come back, that this is a, maybe second week of May exercise. That may be true. It did take them 2 weeks, a little over 2 weeks, in fact, to do this 3.5 bill, this replenishment of PPP and EIDL. We're definitely looking at another bill. There's no question that there's got to be further assistance, particularly including for state and local governments. I think the question is that the second week in May, or does it drag on a little further into May?
Let's talk about the EIDL, because I think that ran out faster. And from what my numbers are telling me, it wasn't replenished to an extent that's going to run out right quick, as we say in the South, the next time around. Or am I mistaken on that?
No, I think you're right. I think it will run out. I think they are going to continue to implement some of the changes that they made, that unless that your $10,000 grant, for example, will be limited so that it's $1,000 per employee up to 10,000. I also think that the loan program itself is likely to run out. It's also true that this is an exceptionally slow program. Even in normal times, this operates more like you would think a government loan program operates, right? You fill out an application in a couple of weeks, there's more questions, and then there's kind of final resolution. And we expect that will continue, both because of the volume, but just because of the way that the program is set up. It was never intended to be kind of a fast strike, immediate assistance program. But you're right to be concerned that eventually it's going to run out too.
I'm getting these questions in real time, and here's a good response to that. They're wondering if you've gotten the PPP loan and then you get the EIDL grant, aside from throwing a party because you've double dipped there, does the EIDL grant go against your PPP loan forgiveness in some way? How does that work?
So if you got the EIDL grant at up to $10,000, that will be deducted from your PPP loan forgiveness. You can't get both the $10,000 and another $10,000 in loan forgiveness under the PPP program. You can get both an EIDL loan and a PPP loan. They're supposed to be intended for different purposes. So the PPP loan is really about covering your payroll. Your EIDL loan may be covering other fixed costs and expenses that you have, capital expenses that you have as a small business. So if you end up getting both, that is very good news, and that hopefully will be helpful. But there's no prohibition against that.
I think I know the answer to this, but just to clarify, if you've already put in for both PPP and EIDL and you didn't get them, do you need to alert your bank? Do you need to alert the lender? Do you need to do anything, or can you just assume you're in line? What's your guidance on that?
So with PPP, my personal advice is check in with your lender. Find out, okay, you've approved me. We know you're waiting on the SBA to assign a E-Tran number for loan approval so that you can originate. Just want to know that you're going to begin processing those loans through the SBA. I think it's just a good thing to check in on and have confirmation that the lender is continuing to process those. With respect to EIDL, if you've done an application, our understanding from the SBA is it's in the queue. We don't have great insight into when they might get to through that queue or to you. But if you've already applied, if you've got a confirmation that you've applied and that it's under review, then there's no additional action necessary.
You talked about the Main Street loans that are going to come available, and these are pretty heavy hitters. Somebody's asking, is that available to nonprofits as well, or just businesses?
Great question. That's come up, and we've asked for clarification on that. So, and it would be a fairly large nonprofit, but we have good-sized nonprofits, across this country, and so we've asked for clarification that, in fact, nonprofits can participate.
All right, second basket question. I'm going to get specific, see if you can give an answer. As a salon owner with salon owner with 5 employees, how can you avoid bankruptcy when the business loan is just going to put an extra burden on my bottom line within my monthly expenses? How do I prevent lawsuits from customers and employees? Why is it not forgivable on this? That seemed like an awful lot to swallow there. Did that make any sense to you?
Well, I think the questions are good ones, right? And I can't give you a good answer about what makes sense for you and your salons, but I think you're asking the right questions, right? So these programs are, none of them are 100% replacement for what we've all lost in terms of revenue. And, some of the terms to maximize loan forgiveness and PPP, you have to pay your employees. And some businesses are going to have to weigh maximizing that loan forgiveness versus some of their other costs, and having the PPP not be forgiven, but to be a loan that you owe over 2 years at a 1% interest rate. And so, there's nothing that prevents a small business from making that decision. It's just going to really depend on your individual circumstances, what the best decision is given the programs that are available to you.
And I think that's a good point to point out, is even if it's not forgiven, we're talking about a 1% loan, which in most days we'd be having a webinar just to say, here's how you get a 1% loan, and everybody would second it. Now that seems like the downside. That's not so bad. Someone here asking again, I don't know if you can get a specific answer, but they're talking about a nonprofit that only has volunteers, and they're asking themselves, does it make sense for PPP for us because we don't have employee income? I guess you do have other things. Is there anything that you could use that for that would make any sense for them?
No, unfortunately, while in theory you could qualify, when you go to calculate your loan amount, if you don't have any employees, you don't have any payroll, and so there's nothing to borrow.
There you go. All right, how about churches? They in the same bill? Are they able to receive any PPP? They weren't in the first rounding.
They've not changed the regulations there, and it really, so in some instances a faith-based institution can, but if its principal purpose is the indoctrination of faith, then so it gets caught up in the normal requirements.
For a single member LLC, how do you calculate wages for PPP? Draws or net profit?
Yeah, so you're going to look a lot like how it's calculated for the independent contractor sole proprietor. So what you're going to do is you're going to take that Schedule C, I think it's line 31 on your Schedule C, which after your expenses, et cetera, is the profit that you took as the single member LLC, and then you're going to follow the process of dividing by 12, multiplying by 2.5, and arriving at your loan amount.
We've asked, this has come up many times. This is the #1 question of the day. An employee refuses to come back to work, right? And we know that they have to, and that's the rule, but reality and perception are going to be 2 different things. Is there anything that the employer should do? Where do you send your note to? How do you alert someone that says, hey, this man or woman is not coming back, I have their job, I've got the PPP. What is the procedure for an owner?
So it varies from state, and our team at the U.S. Chamber is currently compiling all of the processes by state. So the thing in the meantime I suggest you do is you can go to your state unemployment office website, and there should be guidance. In some states, it is the employer files a notice with the unemployment office. In others, it's less clear what the process is. In some states, you have a review where it's reviewed by, I guess, state officials in the unemployment office. And others, it's basically taken as de facto that they become ineligible. So, I would tell you, look at New Jersey. We'll be providing stuff on this in the next couple days to help folks navigate this, but we do want to make sure that the rules are enforced.
All right, I think this is a great question. They're talking about the idea of employees who have been furloughed, and then you get the PPP and you want to bring them back. Couple of points here. Are you allowed to hire different employees back if you want to and replace them? Two, and that leads to the question, let's say we furloughed employee A, they went and found a different job. They don't want to come back. They've got another place. Can I bring in someone there? If I furloughed 2, can I bring in 4 at lower wages and use that money to count? Talk about those scenarios.
Yeah, so the first answer is we don't have guidance on this and we are waiting on this. However, let me tell you what we expect. If you look at the statute and based on our conversations, that the way this is likely to work is this is not a Neil and Tom worked there before. It's got to be Neil and Tom who come back. There is a recognition that what we're really looking at here is employee headcount. We're not looking at it's got to be the same people in those jobs. Now, the slight twist to that is the way that the loan forgiveness can be reduced if you reduce a person's salary or compensation by more than 25%. So that's a little bit more difficult. And so I think what we're likely to see is it's still not going to be Neil and Tom, but if you were paying, Tom, 50,000 and he doesn't come back, but Neil does, and you're only paying him, 25,000, then there's a problem with respect to the fact that you're not maintaining your compensation levels. And obviously you can hire more people, and hiring more people is going to help out with both your head count and probably presumably with your averages, although I assume there could be a weird quirk in there or two once we get the final guidance.
So this brings up another question on all the give and take of the employees coming back. And the question that comes in is daycare, but this could be child care or adult care or sick care. So let's say you furlough me, you get the PPP, and I say, Neil, I'd love to come back, but I've got to take care of my kid because they're not in school, or I got to take care of my spouse or my mother or my aunt because they're sick. So I'm unable to. I think I would still be eligible for the unemployment relief. What is your relief? Do you have to hire someone and replace me to do that? Or if I'm an employer, and that's going to be a real good question that I think a lot of people are going to have.
Yeah, so this is a real problem that needs to be fixed in the guidance, because in the situation that you described, you called the employee back. They said, I'd love to come back, but I can't because I have to care for a child. Well, in that instance, if the employer has fewer than 500 employees, that employee now, as someone who's not furloughed, who's back in the workplace, qualifies for 10 days of paid sick leave and up to 10 weeks of paid leave at 2/3 of their rate of pay, reimbursed by the federal government, because they can't work and they have to care for a child. However, because the federal government is reimbursing the employer for that paid sick leave or that paid family leave, that doesn't count towards your payroll expenses for PPP purposes. So you can very much see a situation, Tom, just like you described, in which you're actually disincentivized for keeping the same employee. And it's one of the things that we flag. It's why, while I'm upset that we don't have final guidance, we know that there are things like this that have to be fixed in the final guidance to accommodate that very situation.
And let's raise this issue, because this is a good real-time question coming in. Full-time, part-time, right? You furloughed Neil and Tom. They both can't come back. I'm going to bring 4 part-time people because I only have part-time work because of the way my business is. I still have to make the dollars. It's like an NBA salary cap, right? You got to make the dollars work. But do they care about full-time or part-time?
They don't. They don't care about that, but they care about the dollars.
Okay.
That's a good way to think about it. We're all professional sports teams trying to manage under the salary caps.
There you go. With the NFL draft tonight, this is perfect timing. We tie everything to the local news. All right. I know this answer. This is going to be good. Try to give me this in 30 seconds or less. A couple of people are saying Shake Shack, Shake Shack. How on earth did that go through? And I think I know the loophole, but just explain it to the viewers.
So the statute said that for purposes of the employee head count, that folks in the restaurant or the accommodation business would be judged not on their total employee head count, but their head count per location.
So they were able to take all of those and put them into one, as opposed to doing 1,000 different applications.
That's correct.
All right, so here at RI, we did a nice story this week with the Restaurant Association talking about how they're under the impression that any restaurant of any size might not want to take the PPP because they're not going to bring back, because when they open up, you can't bring back 15 servers right away. You might only need 3 on the first day because of the slowness. I think that's going to appeal to other places where, again, business is going to be slower. If I'm a retail outlet, if I'm a gardening place, I had 10 employees. I really only need 3. I guess the government wants you to bring all 10 back. How's that juggling act going to work?
Well, that's right. I mean, this is the disconnect between the goals of the legislation and how it was written and what small businesses are and all businesses are experiencing on the ground. When they created the PPP, their goal was, rather than have individuals go on unemployment, to keep them on their small business payroll and just have the government pick up the tab. What they weren't anticipating was the length and duration of this closure and the fact that when it's reopened, it's not going to be reopened in full and total. And so there's a bit of a disconnect there. And I can't fault the folks who said that. Those are the things that you have to take into consideration. That said, different people are making different choices. I talked to a restaurant last night and they're not fully open, but they brought people back and they're paying them because they do anticipate that they're going to be close enough and they wanted to keep their employees close and they figured that they'll be able to bridge that period. So again, as I said before, it's different for every small business, but you're asking the right questions.
So, and I think we got a breaking news story here, Neil. Are you going to tell me that there's a major federal government program where they didn't think it through? Is that what you're suggesting? I'm stunned by this.
Stunned. You know, highlights at 11.
Let's see, what do we got? These advances and loans that we might be getting, is this considered taxable income?
On the forgiveness, no. If you have your loan forgiven, it is not taxable income.
Again, I'm getting a lot of questions from single contractors, right? They're going to go through the PUA legislation, which I'm pretty sure is not yet available in New Jersey. That's going to be a whole nother issue. Everybody's got questions on that. I think the answer is you just got to wait and see at this point.
You do, but remember, you're also eligible as an independent contractor for the PPP and also technically for the EIDL program too. And so at uschamber.com, we have a guide that is designed just for independent contractors. Just go to our COVID-19 resources and it walks through both the process for PPP, EIDL, and the PUA. Again, it has to be open in your state. But when it is open, you're eligible for benefits.
Give me that website again, because I got a lot of independent contractors. uschamber.com. Not an org. All right.
We were an early adopter of the web, so we ended up with the .com.
Wow, look at you. All right. How can I obtain any status for the things that I've applied for? Gee, good luck on that, I'm going to guess, right?
I mean, if it's a PPP, reach out to your financial institution and ask. EIDL is a lot more difficult.
All right, next question. New Jersey specific. Scroll down here. New Jersey is under lockdown. A little strong, but essentially true. How can we get employees to come back and work and fulfill the 8-week requirements for forgiveness if that lockdown isn't lifted? And look, we're having real problems up here. This is a legitimate concern. You're going to get the money back. It's going to be the starting date, and people are still, the state's going to be telling them to stay home. What kind of modification do you think might be coming from there?
At the moment, we don't anticipate any modification. So it was intended that employers would use the money to pay their employees, even if their employees weren't working. And so as counterintuitive as that seems, that was the intent that the lawmakers had, was for employers to keep paying, even if employees might be at home and unable to work.
All right, somebody's saying their accountant advised them only to apply for the EIDL. They're now questioning that decision, perhaps from your insights, and they're saying, should they go back and do the PPP? What would be a scenario where someone should only do the EIDL and not the PPP if you had to think of one through? Does that make any sense to you?
If you have very low, if you're basically your payroll is non-existent, let's say you have very, very small W-2 payroll, then you might, but you have high expenses in other areas, maybe paying independent contractors, for example. In that instance, it might not be the amount that you could get from PPP might not be meaningful enough to make any difference because it's linked to those W-2 wages. And in that instance, idle might be more attractive.
All right, here's some specific numbers for you. Do employees need to be employed on June 30th to get the forgiveness? What if I've used my whole PPP by June 15th and we're still not open and I have to lay them off again? Do I still get the forgiveness?
Part of your forgiveness will be reduced. So, you know, the way now, this is an area where I think there could be some clarifications in the guidance, but, you know, a strict reading of the statute. And by the way, to be clear, they're not implementing the statute strictly. You know, they've made lots of changes that the statute does not contemplate, and, you know,
Again, stunner.
What it is. But that's perhaps something that could be looked at, but a strict reading is that you would lose a portion of your loan forgiveness.
Now, I know that this question, I can't believe this comes from New Jersey. This must be from like North Dakota or something. What are the parameters around, you ready for this? Hiring, in quotes, family members just to meet the numbers that you need to do. Not that anybody would do it, but you throw a brother and a sister and an aunt and uncle on there and sort of keep the money in the family, sort of a Jersey tradition. What do you think?
You know, I think the thing I would say is that there's going to, you know, I don't know of anything that prohibits that I've seen. Doesn't mean that there's not. Also doesn't mean that if that takes hold, that they won't be coming in to take a look at that, right? And so, you know, this afternoon, the Treasury and the SBA issued new guidance because of some of the stories about companies who may not have needed the money getting the money. And they basically said, you did have to certify that this was a necessity to take out the loan. And by the way, if we come to find out that it wasn't a necessity, that could be fraud. And by the way, if you give the money back by, I think it's May 3rd or some day in May, then we'll just pretend like it never happened.
Okay. All right, another real-time question for the people who did not get the PPP money, and you just mentioned, hey, maybe you should go through a credit union, you know, somewhere else. Can you have two applications at one time? Can you, you know, if mine is sitting with B of A or Chase or one of the big firms, can I then go to my small credit union and say, hey, let me try to get through the back door too? Is that possible or is that flagged?
We certainly know that it's happening, and it's happening a lot. You know, there is no prohibition that it says against applying in two places. There's a strict prohibition about receiving two loans. And so one of the things that the SBA kind of checks for is that they'll look at your EIN, your employer identification number, make sure you haven't already gotten a loan. And so they're supposed to check that. If for some reason you slip through the system, whatever you do, do not sign two loans. Because that is absolutely frowned upon.
Even in New Jersey.
Even in New Jersey.
All right. Can you prepay future utilities, health insurance, rent expenses with the PPP loan?
Generally, no.
Do you have to reapply for idle after the system crashed? I think we know the answer is once you're in, you should be in, right?
Well, did you get a number? So the important thing is you should have, at the end of the process, been assigned a number for tracking purposes. If you don't have that, you may not be in the system. If you have that, you're supposed to be able to confirm that you're in the system.
All right, let's talk about this because everybody's getting different things, getting notifications, getting numbers, getting this email, getting that email. If everybody applied for PPP, we all got some sort of note from our lender. Some people are saying that they've been approved, but they haven't gotten money yet. Does that sound right? Are people misreading what the banks are telling them, and that maybe that just their application's been accepted, but they haven't actually approved? How do you find out? What's the term you're looking for to know that I am getting? At this case, I think anybody from the first round would have got their money by now, correct?
They should be getting close if they haven't already. But So, and the problem is that there's no consistent terminology, right? Because, the banks are all doing this, but you just need to think, you need to be aware of the different parts of the process. And you just need to be if you're confused, you need to ask your lender, tell me exactly where I am in this process. So stage one in the process is the bank has received my application. Okay, well, you've received it, but you haven't approved it. Stage two is the bank has approved my application. Then the next step for the bank is to submit that to the SBA for the SBA's approval. So just because you've been approved by the bank doesn't mean that you've gotten the SBA approval. They submit the SBA approval. Once the SBA does their checks, your loan gets a unique number that goes back to the lender. That's the linchpin. That's the thing you're looking for, because once that lender has that number from the SBA, they can originate your loan, and you can sign the loan documents and get the proceeds.
Somebody here saying they applied for an EIDL loan on 4/7 and they've heard nothing back. Is there a better way to follow up on this? Is radio silence the norm?
Sometimes it is. So I was talking 2 days ago. We were on a call with an employer in Massachusetts who applied for EIDL the second day it was open. So this must have been right around the very beginning of the month or the end of March. And they had just gotten the night before the deposit of $5,000 in EIDL grant funds.
Okay. Sole proprietor, LLC, 3 part-time employees. I don't need payroll assistance, but I need assistance for rent, utilities, insurance, and all of that during the shutdown. Is there anything for me that makes sense?
Could be an EIDL loan, would make the most sense for you. Most of the other benefits are really tied towards payroll. If you might want to look at, even though it's not helping with, if you're continuing to pay your employees, even if they're part-time, you might want to look at the payroll deferral. You might also want to look at the employee retention tax credit, just because it's an additional reimbursement that might help you offset some of those other costs. But there is no program that is specific to utilities or those other expenses. All
right, we're starting to run out of time. I'm on batch number 6 here. Thanks to the fine folks at Witham who just keep feeding me these questions. The Witham folks really do a terrific job. And I have perhaps breaking news. Someone here is saying that pandemic unemployment insurance assistance is up and running in New Jersey. So we'll assume that that's correct. But the question right after it, real estate agents, right? Commissions coming in, house closings. You're going to close, but you're not going to close for another month. How does that play as far as PUA? Is there really a good way to do it? Or it just seems like a crazy scenario for them?
So it would depend on what the guidance is from the states and kind of their application and processing. PUA is available in general, not just if you are completely unemployed, but if you have a reduction in income. But again, you go through the state on this process, and I can't say with clarity what the rules are there in Jersey.
Oh boy, here's a great one. What about employees teaching via Zoom to out-of-state people? Seminars, Pilates, exercise things. How is that treated regarding PPE? If you've set up some tele-learning, tele-teaching, I guess that if you're paying if you're getting a salary for it, you're getting a salary. It doesn't matter what you're doing, right?
Yeah, doesn't matter what you're doing.
Okay. I think we could all use the Pilates at this point. What kind of relief does an LLC where 75% of the work is performed by the owners? Or what are they supposed to apply for? Would that be the PUA?
Well, they could also apply for a PPP. So, presumably the owner is taking compensation in some form from the LLC, and you can qualify for the PPP.
All right, here's a great question. Some of the banks, not sure which ones, are saying that if your payroll is not at least 75% of the PPP, you will not receive any all caps forgiveness. Not that just it'll be reduced. Does that sound right?
No, so this is, I mentioned earlier that they're doing some things that aren't in the law. This is one of them. So one of the regulations that they put out said that in calculating the loan forgiveness, that in the maximum, whatever the total is, 75% of that must be for payroll. So, you know, imagine that you're in a situation where you add up payroll and utilities and other things, and it's $125, but only $75 of that is payroll. Your maximum loan forgiveness would be capped at $100 under the regulations. So it's not that you lose the whole thing. It's just 75, you know, take whatever your payroll is, and you can only have 25% additional for non-payroll expenses.
Another question on EIDL, which is throwing everybody off. I have an application number. Does that mean that I should feel confident that I'm in the queue?
Again, I would try to, I never want to say that you should feel confident. We're talking about a government program that's been overwhelmed here. And so I never think that there's a harm in checking, but having a confirmation number is a lot better than not having a confirmation number.
EIDL checking individual credit report, which I think would doom a lot of us here. Is there any truth to that?
Yes, they will, they can, and sometimes do check. That was done normally they look at your tax returns, and you have to actually supply the most recent tax return in your application. Congress said that they could simplify it by saying instead that they would just look at the credit worthiness of the borrower, so your credit check.
And this person is saying that for whatever reason, for security purposes, their credit report is locked. They might be in the SOL program, I'm guessing.
You'll want to figure out what you can tell the SBA, et cetera, and make sure it's either unlocked for their purposes or whatever they need. But you know.
All right, one or two more questions. This viewer says their bank is not giving any information on the process. All they say is they have your papers, but they won't tell us we're in the queue and this and that. Any recommendations for getting an answer, or is it time to go to another bank?
I don't have a good, you're gonna have to make a judgment call about whether you trust there or whether you want to take your chance somewhere else.
Can you hire the staff back on the week of June 30th and still qualify for forgiveness? I guess you'd have.
Well, so depending on if you got your loan already, remember the first part of it is the payroll that you paid in the 8 weeks after origination. So let's assume you got your loan tomorrow. If you wait to hire them back on June 29th, you didn't pay them at all for the 8 weeks after origination. So you don't have any payroll to have forgiven.
Oh, here's another question only in Jersey. Can you give each employee, say, 20 grand and then not pay them for the next 3 or 4 pay periods? I'm assuming there's like a shoebox full of 20s that they're going to hand over.
You know, I think I don't think the statute addresses that. Maybe we'll see something like that in the guidance. I don't think that's what they were thinking when they constructed the program. But you know, as we've learned that the people find different ways around. So I don't believe that's restricted in the statute. We'll see what happens with the guidance.
All right, we're going to put that as an only in Jersey question, and I've been doing this long enough to know that when you get your mic drop question and you stump the band, it's time to go. It's 5:30. Reach the end of the bewitching hour. I want to bring Tom Bracken in one more time to say a few words, but Neil, I'll speak for all the people out there. Great answers to all of these questions. I know they're complicated. With the exception of the shoebox full of 20s, you seem to handle them all. But let's bring Tom Bracken in for the final word. Tom?
Well, that was wonderful, Neil. It was an incredibly thorough presentation. The breadth of your knowledge is exceptional. And I have to thank you for being a resource to us and all of our chamber colleagues. You've been great during this whole process, and it's good to know you're there for us. Tom, you and ROI, great job as usual. and also your partnership today and ongoing is greatly appreciated. I want to thank the advisory and accounting firm Witham and Bill Hageman, the CEO, and also the 26 chambers that are on this call who partnered with us today. It was very entertaining, very thorough. We can't thank you enough. And we will be having more webinars. We have one with the Assembly Speaker Craig Coughlin on May the 6th, and we'll have more to come. But Neil and Tom, very entertaining, very thorough, very informative. Thank you very much. And thank you to all who are on the call.